Hello, students. So today's class is Introduction to Accounting and Finance. We need to understand the difference between accounting and finance because usually in business school there are two different areas. There are people who are studying only in accounting and learning how to become an accountant, and people who are studying finance and studying how to be a finance person. These are two different areas with two different skill sets and different tools. That's why it's important to understand how to differentiate these two different areas. So let's first of all start with the finance. In general, finance means management of money. So it includes activities such as forecasting, borrowing, investing, lending, budgeting money. You maybe have heard a lot from different people, from mass media, from families, organizations, the word finance. All of them are using the word finance. So what does this word mean? To understand finance, first of all, we need to identify necessary resources. So by saying resources, we usually mean assets, okay? We can say resources or we can say assets. This is a valuable items that the company is holding in order to derive future economic benefit. What kind of assets person or company, any organization can have in day-to-day business, in day-to-day life, let's say. So assets are everything that you own. And in order to get these assets, we need to have money, right? So the second step is to determine the best way to get cash to acquire these resources, these assets. There are several ways to get money for those resources. First of all, what we can do, we can borrow money, right? Also, we can use our own money. So we need to determine what will be the best option in this case to get these necessary resources for us. After getting all of these resources, we need to manage them effectively and efficiently to take care of them, make these resources secure and safe. So all of these are defining a finance. This is like a broad definition for a finance term. Let's look at them from the company side, from the organization side. So first of all, we need to identify what are our resources. So first of all, let's look at long-term resources. What does it mean, long-term resources? This is an assets that will be used for a long run period, right? What kind of assets it can be? It can be land, building, machine, maybe equipment, or if you are delivering, if you have a delivering services, it can be an automobile, right? It also can be a plant if you are producing something. So any of these, let's write an equipment, or maybe cars or plants. And all of these are long-term assets. So by saying long-term assets, we usually mean assets which will be used or consumed in the period more than 1 year. Okay. We also have a short-term assets, which are cash and inventory. Cash is not only the cash that you have in your pocket, okay, or in your wallet. Cash, or we also say cash and cash equivalents, are cash that you may have on your bank accounts or on your bank deposits, which is more like not a cash, like a cash equivalent, right? So all of these are short-term assets. Why we call them short-term assets? because these kind of assets are more liquid. They can be used in a short-term period. Usually short-term period, as you may have understood, this is a period which is lasting for less than 12 months, less than 1 year. Also, what kind of resources do we need in order to do a business as a company? We need some operating items. So operating items are our employees. Employees are an important part, right, of the company. So employees, in order to keep our business running, we need some staff and we need some R&D. So what does R&D mean? R stands for research and D stands for development. R&D are costs of the company. These costs may apply, it mainly applies to some pharmaceutical and technological companies. But it can apply to any industry which makes, to any company in any industry which makes some new technologies, creates some new products, creates some new procedures, breakthrough innovations. It's all about creating, investigating, and testing new products. That's why it is called research and development. So this usually this kind of costs, they have millions and billions of dollars, and they are taking for several years and even decades sometimes. That's why we call them research and development, and it is also a big part, a big portion of creating a business. So what other resources the company may have? Marketing. You may understand that, you may know that marketing is usually all about promoting products, advertising their products, promoting their social media. What else? It's all about PR, right? So you know what does the marketing word mean. All of these resources that the company may need should be financed. So again, I use the word finance, right? Where to obtain money to buy all of these resources? As I have said previously, we can borrow money. So since we are looking from a company side, where the company can borrow money? It can borrow it from another organization. It also can borrow it from a bank, right? By taking a loan, by taking credit from a bank and paying some interest. So this is one option, to borrow money from someone, from organization or person. Also, we can use funds from our owners. When we are talking about organizations, owners of our organizations are called shareholders. Shareholders. Okay, so we can take money from our shareholders. Of course, they're not giving this money for free, but we'll talk about it a little bit later. And the third option is internally generated profit. If, for example, business is working for several years and generating some profit by itself, it can use this money to buy needed resources, again, for itself. So internally generated profits, or as we also call it, net income, is money that the company can use because it has earned this money by itself, and will use it in order to buy some resources, some assets which is needed to grow the business, to grow the company, and increase the wealth of the company. So we have identified where to obtain this money, and now we need to manage these resources. So managing the company's assets can be completed. It can be very complicated if, for example, company is a big one, big organization. So usually we have such procedures as scheduling, timing, budgeting, all of this is made in order to manage resources efficiently and effectively. Also, we have a controls. Usually we call them internal controls, okay? Internal controls. These internal control procedures are important in all of the companies. For example, when auditing companies such as Big Four companies, they are doing their audit, their assurance procedures, before starting this, they are looking for internal controls of the company. So how company is controlling some anti money laundering procedures, or how they are managing, for example, some fraudulent activities. So all of these internal control procedures are crucial for the company. That's the way to protect resources, assets of the company on the organizational level. Okay, so we have looked at this finance from the company side, and it gave us a hint. It gave us a hint to narrow down our definition of a finance term to only one sentence, which is determining the best way to get money, okay, to buy necessary resources. So we have narrowed down it to only one sentence. So that's what a finance means, okay? Now let's look who are the main market players in this finance world. Let's say that we have only three types of market players: entrepreneurs, investors, and facilitators, okay? So entrepreneurs are people or organizations who are commonly seen as creators, as innovators with great ideas of new products and procedures, new ways of services. These people and organizations are usually seen as big creators who needs money. So the key word here is that entrepreneurs, they are looking for money. And also in this finance world, in this market, we have another player who is investor. Investors are usually individuals or again organizations who have saved some resources. By resources, we usually mean cash in the past and now want to invest this money. They are investing them not for free, of course, but they're investing them under different terms, and they're looking some new opportunities to make their wealth even bigger, to make their investments working and to increase the amount of resources that they have now. And also, as a third party, we have a facilitators. Facilitators are usually financial institutions, big financial institutions specialized in matching these entrepreneurs who needs money with these investors who has money as a bridge. Okay, so they're matching them with each other and getting some commissions and fees for that. So let's look. As we have understood, entrepreneurs are, if this is a people, these people who are seeking for some opportunities to have and open an organization. If this is a company who is seeking for some funds, it will be within the company, right? So outside of the company, we have two players: investors and facilitators. Investors, or savers, as we can call them, these people will not give money to everybody who is asking, right? They are looking for the best options to invest because they want to protect their money. If the entrepreneur fails, it will be, the investors could not ask for anything from those people because they don't have the resources, they don't have the cash, they don't have the money in order to give, to return this money back to investors. That's why investors have certain questions before they will provide this kind of cash. So one of these questions is under what term should I provide funds for the company, for the entrepreneur? So usually entrepreneurs say that we will pay dividends in the amount of this and that, okay? Also, entrepreneurs can give them a portion of shares of that company. So investors will have some share of that company and they will be partially owning that company. Okay, and the next question is, what about my portfolio? So all of great investors, all of good investors, they are caring about their portfolio. What does a portfolio mean? Portfolio is a set of financial investments made by investors. So it is a set of financial instruments. Okay, it can consist of some stocks, bonds, cash. Usually people think that by portfolios they mean only this kind of financial instruments. Of course, they can be derivatives, they can be real estate, which is very popular in Kazakhstan, right? And also in this portfolio, investors can have some arts, unusual specific arts, which can cost a lot. Also some private equities. So all of these is like a bunch of instruments, a bunch of investments that the investor have is called a portfolio. So my portfolio consists of some risk investments and some risk-averse investments, let's say. So investor can say in this, there are different kinds of investors. Some of them are risk takers, some of them are not, but all of them has a certain portfolio. And usually in one portfolio, people don't like to have the same kind of stocks or stocks in one industry. So they are trying to make it to differentiate it, okay? So also outside of the company, we have financial institutions. Financial institutions, our facilitators, they are gathering money from the investors and then conveying this money to the companies. Okay, so we have what kind of financial institutions we have? We have banks, mutual funds, private equity funds, insurance companies, investment banks. So we have investment banks, and by saying just bank, we usually mean a commercial banks, okay? As a banks that all of us know. So they are taking money by collecting this all from the depositors and giving money to customers by providing loans, borrowings, credits, and so on. So we also have some other financial institutions. Most of them are not so popular in Kazakhstan, by the way. So what we did, we have defined the finance term, right? Now let's see, what does accounting mean? So we know that the finance is all about managing money in the future, right? So seeking money, managing money in the future. Accounting is a system of providing numerical information, financial in nature, that is intended to be useful in making decision. What kind of decision? This one, okay? So accounting data, financial data is used in order to make financial decisions in finance, okay? So what we have some numerical information, which is a historical data from the past, okay? We have some, if, for example, we are the management of the company and we are making some, let's say we have worked for several years and now we need to make a decision. What we will use? We will use our accounting data. So we will use some our numerical information, our accounting data will gather it, report it on one paper, and based on this information, will make some decisions in finance. So accounting is more like it's certain numbers. There are no forecasts. All of them are known because of this historical data. So now we know that we have some numerical information, financial in nature, okay? And it is used in order to make decisions. What kind of accountings do we have? In general, we have three types of accounting, okay? The first one is tax accounting. We'll not cover it on this course, okay? We have a managerial accounting and financial accounting. So the first one is tax accounting. It's absolutely separate area, which is tax accounting is very different from managerial financial accounting. It is used mostly by tax people and tax authorities who are working with taxes. Usually it is a separate course. On this course, we are learning tax schemes, tax rates, tax implications, which is a very complex one. Then we have a managerial accounting. Managerial accounting is about gathering all of the information in order to make decisions on the company level. Okay, this is internally making decision within the company. So managerial accounting is used mostly. It is also about a historical data, historical information, which is used in order to make decisions within the company, which means that only managers and employees see this kind of information. And the third one, the main one, is the financial accounting. We'll talk about financial accounting a lot, okay? Financial accounting is again about gathering and reporting this information on paper, analyzing this information for the benefits of external users. Who are the external users of the company? Our shareholders, our creditors, okay, our suppliers, our clients, our customers are also external users. So they can look at our financial accounting data and make some decisions based on this financial accounting data. What is a financial accounting data? These are our financial statements, okay? We call them financial statements. So we have 4 financial statements. 4. But now we'll cover only 3 of them. The main 3 financial statements are balance sheet, income statement, and statement of cash flow. Let's see one by one. So first of all, let's answer the question, how are these financial accounting data used? As I have said, these financial statements, they are used a lot by our creditors, shareholders. So talking about creditors, before taking some loans, before giving to us, to the company, to the management of the company a loan, they will look at our financial statements. And based on this, they will make a decision whether to give us a credit or not. Because based on the financial statement, they can see whether the company will be able to pay back our money to the bank. For example, if we're taking a credit from a bank, they're looking at financial statement, make some credit analysis and say whether they will give us a loan, a borrowing or not. So after getting this, let's say we have signed an agreement with a bank. We got some loan. We took this loan from them. We have an agreement with them. And according to this agreement, they will give us some loan covenants. Okay, and these loan covenants, they can be different kind of loan covenants. And bank can say, okay, if you breach these loan covenants, we will require to pay back the whole amount as immediately. That's why it's important. So they, according to this financial statements, they're looking on the financial statements, and based on these statements, they say that that the covenants, did the covenants breach or not. Okay, we also have a regulatory uses, which is used mostly for big corporations, big organizations. In some countries, there are such a big companies which are making the main portion of the economy of the country, and usually these countries are looking at the financial statements. Okay, they're just reviewing these financial statements, and based on these financial statements, they're making some decisions on taxation or some regulatory policies, and regulatory uses of financial statements are also crucial for both for the company and for some countries too, and also for valuation. So financial accounting data are used for valuation mostly when companies, when we have two companies, for example, company one and company two, and these two companies want to merge, okay? Or one company want to acquire another company. In these cases, what they need to value the second company. To make a valuation, what they are doing, they are again looking at financial statements, at financial accounting data. Make a valuation and then paying to shareholders in order to acquire this company. Okay, so that's how financial accounting data can be used. Let's see how managerial accounting data can be used. So as I have said previously, it is internal information, and no external users can see this kind of information, managerial accounting. So what kind of decisions they are making? What will be the product cost? Okay. What to budget in the next period? Shall we buy a new equipment? Shall we budget more money or less money for the future year? So budgeting is a big portion of managerial accounting. Also, performance evaluation. We have KPIs, key performance indicators, right? So by this evaluation, we're deciding whether the employee should receive a bonuses in the end of the year or not. So nobody cares about the bonuses of that person except for that person, right? That's why this is again internal decision making. It is a managerial accounting, which is made within the company. So this decision is made within the company, and no external users, they don't know about this information. This fourth is invest in a capital project or not. So investment in a big capital expenditures is a question, managerial accounting question. Outsource production or make this, produce these kind of products by ourselves. Add a product line or remove a product line. All of these questions are like different in nature, but have the same common thing, which is make a decision based on company level, okay, on management level. That's why it is called managerial accounting, okay, because all of these decisions are made based like on the level of management. Okay, so let's talk about our financial statements. The first one is called balance sheet. So balance sheet is like a more common word which is used by accountants, but usually if you open any financial statement, you will see official name, which is a statement of financial position, okay? So this is official name of balance sheet, statement of financial position. Usually when you have a balance sheet, we need to assume this kind of box. So on the left side, you always have all the assets of the company listed on the left side, okay? On the right side, we have liabilities and equity. Listed liabilities and listed equity. So equity or owner's equity doesn't matter. The same term is together with liability will be on the right side. So what are assets? As we have said before, assets are our resources that we have. You remember all of these valuable items that we have in order to derive a future economic benefit in the future for our company. We have all of these assets in the left side, and now we need to think how all of these assets were financed. How did we buy it? So the right side will show us, okay, how we bought all of these assets. So liabilities, for example, show all the monies that we owe, amounts that we owe to creditors, to our suppliers, to tax authorities, to employees, all of this money that we owe because we got this asset. And we have an equity, right? Equity shows money which were provided by our shareholders, by owners of the company, in order to, again, finance these assets. So we have both liabilities and equity. Equity also has these direct investments from shareholders or retained earnings, okay, or retained profits. Usually we use the term retained earnings, which is, again, the profit that we have earned by ourselves. So the company is working for many, many years, and in previous periods, in previous years, the company have earned some profit, made an income, net income, right? So this money which were earned, generated by the company is called retained earnings. We have earned them, and now we can use them again to buy our resources, to finance our assets, right? So here you need to understand the main accounting equation, which is assets equal to liabilities plus equity. Why it is important? If you are making your calculations and you see that assets are not equal to liabilities plus equity, it means that you made some mistake. It will be always equal, okay? That's why we call it this equation the main accounting equation, okay? Assets will always equal to liabilities plus equity. You need to remember this. So this is equation of the balance sheet. We will use it a lot. And one more important thing that you need to understand in the balance sheet is that balance sheet is given to you as a certain date, as a certain moment in the time frame, okay? So imagine that you have that now you have a certain list of resources and you have them only today, okay? You didn't have them yesterday, or maybe you will sell them tomorrow. That's why we're listing it at a certain period of time, okay? It will be for only a certain moment in this time. That's why we're reporting a balance sheet as of certain date. Let's say usually in Kazakhstan we use 31st of December of 2021 as an example. So the balance sheet will be given as of certain date, okay? Now let's move to income statement. So income statement is also a common word which is written in all the financial statements as a statement of of profit and loss, okay? Of profit and losses. So we call it, or we call it P&L statement. So P&L means usually profits and losses, okay? Income statement is a simple one. So we have some revenues with a plus sign, we have some expenses with a minus sign, and as a result, we have a net income. So revenues are all the amounts, all inflows of assets generated by selling some goods or providing some services. By inflow of assets, we usually mean cash or promise to get the cash, to receive this cash, okay? This promise to receive the cash is called accounts receivable, okay? We also have an expenses. Expenses are all costs that we have. We have some outflows of assets because we have received some services or products. So we have an outflows of cash or promise to pay cash somewhere in the future. Our costs can be costs to our suppliers. It can be cost to some tax expenses, right? Paid to tax authorities. It can be expenses for an insurance. The big portion is a salary of our employees, which is also an expense. So all of these outflows are our expenses. In simple words, we have earned some money, we spent some money, and as a result, we got net income, which is also called as a profit. Okay. So this is all about income statement, but income statement is given for a certain period of time. Okay, so income statement can be given for a week, it can be given for a month, it can be given for a quarter, but usually companies doing their income statement, they're recording all of this transaction and making one income statement for the period of 1 year. Okay, so this is for the period. We are making it for the period. Income statement is given for the period of time. Next is statement of cash flow. Cash flows are also given for the period time. We have some operating cash flow, investing cash flows, and financing cash flows. So statement of cash flows, as the name says, it shows all cash inflows and outflows. Okay, so we have 3 sections in this statement. The first one is operating cash flows. They are showing all normal business activities, all cash inflows from the money received from our customers, all cash outflows that we are paying in our day-to-day operations. We are carrying out some operations and paying money, receiving money, and since this is our day-to-day business transactions, we are recording all of them into our operating cash flows. Okay, this is our day-to-day transactions. We also have investing cash flows. Investing cash flows is not related to our investors. Okay, it's not related to shareholders. Investing cash flows is called in that way because we are investing. We are investing as a company into heavy assets. So investing in property, plant, and equipment, and selling property, plant, and equipment, our heavy assets, which we are using, or which can be used for more than 12 months. All of these transactions, inflows and outflows of cash related to these heavy assets, will be in investing activities. We also have a financing activities, which is related to the cash, the funds that were received by the company. So someone financed our company, okay? Again, we have said it can be a borrowing, it can be our shareholders, or it can be dividends that we are paying to our shareholders. So everything which is related to financing us, which is borrowings, loans from the banks, also money received from our shareholders, money paid to our shareholders as a dividends will be our financing activities. Shareholders never give money just as a donation, right? In that case, it will be called donation. They're investing money in a company in order to receive some dividends in the future. So we have operating, investing, and financing cash flows, which can be both as inflow and outflow. And as a result, we have this net change in cash, okay? Net change in cash. So we're summing up all of these cash inflows and outflows and getting net change in cash. Okay, so I have said the statement of cash flows is given for a period of time, right? Now we have covered three main statements, okay, of the financial statement, and I have some homework for you. So I want you just to review these financial statements. This is a real financial statements of the companies, and try to answer questions which is given to you. You need to try to analyze them and come up with some answers on our recitations. Income statement of Walmart, income statement of Microsoft, and statement of cash flow of Kazmunaygas. So just try to think about them. If you don't have an answer, you don't have a solution, ask your peers, try to discuss it with your peers and come up with some solutions on our recitations. So thank you for your attention. I'm looking forward to see you on recitation classes. Don't forget about your homework and see you soon. Bye-bye.